First of all, let's even talk about oil because that's a big issue right now. We're seeing oil at a 2-year high of 115 thereabouts dollars to a barrel for Brent, and obviously that has implications for Nigeria. What are your thoughts on the dynamics that we're seeing on the oil market?
Well, right now on the international scene, you can see that the Brent spot on the London Stock Exchange has risen to its highest level in about 18 months. And you can see that the spread between the Brent spot and the Western Texas Intermediate WTI crude future is at the highest of about $15, which has not been experienced in close to 6 years. The implications is that with the continuation of crisis in the Middle East, in North Africa, which as you can see in Libya, which is likely not going to end in the short run, we expect that the price of crude oil will gradually continue up. But when you consider that the United States have an arsenal of weapons they usually use, like George W. Bush used the supply of crude oil and the release of the ban on drilling offshore in risky, volatile areas like Alaska, like Louisiana, like New Orleans. In 2008, July 2008, where we saw the price of crude oil tank from about $145 down for several months to about $35 per barrel. We are very sure that the U.S. is watching and preparing to release the arsenal of weapons to bring down the price of crude oil.
So you expect some stability in the next week or so?
We expect serious fluctuations and volatility. We're going to see wild swings up and we're going to see wild swings down. So the emerging markets, especially the oil producers, need to be careful, and at this point they need to hedge their positions in terms of the expectations on profit from crude oil.
Anyway, let's come back to the equity market. Obviously, the market is run through a bit of a difficult patch recently. We saw, like today, it was down 1.9%, and obviously there's talk of no real catalyst out there to drive the market forward. What are your thoughts on the equity market today?
Well, the Nigerian capital market has come to a point where it's trading on a sideways range and is also trading on a bearish range. Because, like you rightly pointed out earlier, investors are getting fatigued based on the fact that there are no real fundamentals driving the market right now. It's not as if we have tangible growth in all the major companies on the exchange right now. The bearish trend we saw today in the capital markets, led by the likes of Nestle and Dangote Cement, are purely speculative. There are no real fundamentals like a loss of a particular product line or a disaster in any of these companies that prompted the massive sell-off we saw in the markets today. So we can say that investors believe that the stocks are a bit overpriced and they are trying to book in some profits to avoid the stock tanking before their eyes and clean away the profits they've made so far.
So do you think it's possible that we see this bear run last for another week or so?
We believe that the bear run is at the tail end of the rundown. We're going to see higher support levels and we're going to see it pull back to the resistance levels and the bullish trend will come back again.
Let's talk about Nestle. I mean, you just mentioned that company. And obviously what has been driving it is beyond the positive results that the company has released, there's also the expectation, or rather the demand that the bonus shares that the company has promised to pay has created. But that, to me, that sounds like a recipe for another bubble, but more so for that stock, given the fact that it has run up so much over the last 1 year.
Yes, like you said, you see, there are two sides to this. There is the expectation and there is the reality of it. Now, while the company might promise to pay a particular dividend, what we should ask ourselves really is, are the earning per share, the PE ratio of the company, is it at a significant levels that can match up with the dividend payout the company is proposing to its investors? If it's not, then we're going to, like you said, see an artificial bubble up because of expectation, and we're going to see a tank of the stocks, which is likely what happened today in the Nigerian stock market.
And finally, let's talk about the banks. Obviously, they have been under pressure as well. We saw quite a few of them come down, and quite significantly today. What's the outlook for that sector in your view?
Yes, like we said earlier, the asset management company of Nigeria is come to a point where it's beginning to wind off its purchases of the bank bonds. I mean, when it started with about $8.5 billion, that's about 1.3 trillion naira, the momentum was very high. People bidded the stocks. And right now, it's beginning to slow down on the influx of cash to buying bank bonds. So investors are kind of taking profits away from the bubble that we saw as a result of the flow or the demand, the flow of money to these rescued banks. So right now, we're seeing profit taken from the table. And over the long haul, in the next 3 quarters of this year, we're going to see the market go back up, led by the banking sector. The capital markets, the Osher index is going to rally back up to higher levels, above higher highs, led by the banking sector, because that is what's contributed close to 70% of market liquidity so far. So we believe that the recovery in the Osher index will be led by the banking sector.